Disadvantages of traditional banking. I am a big fan of traditional banking, and our economies would not be where we are today without them. They have provided the financing which has acted as the fuel to drive forward most of our industries. However, I would be putting my head in the sand if I failed to see some of the weaknesses of traditional banking. Online banks have exploited these weaknesses in recent years to get their own piece of the pie. 1. Low interest rates. Perhaps one of the biggest weaknesses or disadvantages of traditional banks is the low interest that one can earn on their savings. This has been exacerbated by the financial crises we have faced in recent years as central banks reduce their interest rates to rock-bottom rates. In some cases, this has meant that if you keep your money in the bank, it would in real terms lose its value, as inflation rates are usually higher than the interest rates. As a result, many pensioners have been forced to reinvest their savings in other risky investments such as private sector bonds. Others have ended up trusting fraudsters like Bernie Maddoff, who defrauded investors of billions of dollars. 2. High bank charges. Another weakness of big traditional banking that has been exploited by online banks is the issue of high bank charges. Big banks are notorious for charging high bank charges for anything from overdraft fees, monthly operating fees, etc. In some cases, the regulatory authorities have had to come in to bring some sanity to the banking sector. Banks, if left to their own devices, would easily exploit the common man in the street. I remember a few years ago there was a payment protection insurance scandal in the United Kingdom. In this scandal, the authorities ordered banks to pay back billions in payment protection insurance they had unnecessarily encouraged borrowers to take. With pressure coming from online banks that are charging low to no charges, the big banks may be forced to rethink their fees. 3. Reduction in number of bank branches. Over the past few years, there has been a significant reduction in bank branches as big banks try to reduce their operating expenses. While this is good for them, it has meant that the common man now has to travel further to access banking services. This is really a big problem for businesses and persons that have no choice but to go to a bank for some services, such as to make cash deposits. And we all know how criminals are attracted to cash. And traveling long distances will increase the chances of one being robbed. I hope that banks will reconsider these moves in the interest of their customers. Whether we like it or not, people still use cash in spite of the rapid rise of debit cards and other electronic payment systems. 4. Reduction in the number of automated cash machines. The reduction of bank branches has also led to the reduction of cash machines, or ATMs. This has really inconvenienced many customers who now have fewer available sources to get cash. I remember a couple of days ago, I needed some cash and was forced to use a cash machine that charges exorbitant fees. I had to use this cash machine as my bank's cash machine was moved a few months ago in my area. A couple of years ago, almost everywhere I went I could easily find a cash machine from my bank and other big banks. Now that space is being taken by companies that want to make a little cash from those transactions. Soon we won't have any no-fees cash machines around. 5. Slow service. Because of the consolidation in bank branches, it is now taking longer to be served. This is because the queues are long and there are now fewer and fewer bank tellers around. It is really frustrating sometimes to be forced to queue for at least 30 minutes during lunch hour when you are supposed to be resting. Meanwhile, the last time I checked, the banks were still making millions in profits.